UPS is scheduled to report first quarter earnings on Tuesday, April 29th, before the market open. In the previous quarter, UPS reported revenue of $25.3 billion, missing revenue estimates by $114.12 million. ETR reported earnings of $2.75 per share, beating estimates by 22 cents. For this quarter, the revenue estimate is $21.02 billion with earnings per share of $1.38. Over the last 90 days, no analyst raised estimates and 14 analysts lowered estimates. UPS beats analysts' one-year forward estimates 73% of the time. Looking at the UPS price chart, I'm going to start out with the 10-year view, because one of the things that I notice is this support at around the price that it's currently trading at, where this triple top was formed in 2018 two times, and then at the end of 2019 we do have a triple top support there. We can see that UPS has a dividend forward yield of 6.66%. I'm going to move back to just a one-year view, and we can see that UPS is trading slightly above its 5-day moving average, but it's trading below the 20-day, the 50-day, and the 200-day moving average. It is showing relative weakness moving into earnings. The RSI is improving slightly, but it's still below this 50 line. The PPO did signal a buy signal on April the 22nd with the black line crossing above the red, and the momentum is improving. If we look at the relative strength, we're currently below that of the SPX. If we look at momentum, we're slightly above that of the SPX. We did have accumulation from this period, but now we're showing decumulation at this point. The money flow is negative. And if we look at the performance relative to the SPY, it's underperformed the SPY by 36.94%. If we look at the sector, the XLI in the industrials group, we can see that we've underperformed 34.67%. And then if we look at the specific industry group, it's underperformed 7.52%. Moving to the UPS trend over the long, midterm, and short term, we can see on the long term it is definitely underperformed. We can see that in the midterm it's also underperformed, but it is starting to improve just slightly. And in the short term, we can see that it got down to its low here and is also improving in the short term. UPS is trading at a discount to the industrial sector with a forward PE of 13.17 times compared to the sector average of 17.64. UPS is expected to have an EPS growth rate of minus 13.46% compared to a positive 7.65% for the sector. UPS is expected to have declining revenue with a growth rate of minus 0.61% compared to the 4.61% growth of the sector overall. UPS is slightly more profitable when comparing its 6.35 net margin with the sector average net margin of 6.21. When looking at fast graphs over a 13-year time period, we can see that UPS is currently trading at 12.76 times. It has an EPS yield of 7.84 and a dividend yield of 6.7. We can see that it's currently trading at levels that have support back in 2018 and 2019. We can see over the last few years they have had some decreasing earnings, but analysts are expecting them to increase their earnings in 2026 and 2027. Over this period, they have grown their earnings by 5.30%. Their fair value ratio is 15, and their normal PE is 17.65. We can see that here with the blue line for the normal PE and the yellow line for the 15 times fair value ratio. They are trading below that at this point. If you have any thoughts to share, please leave a comment. Talk to you again soon. Have a great day. Thank you.